Good morning. Welcome to our regular second Saturday webinar. We will start the presentation now. The last 1 month, if you see, market has bounced back very smartly. The biggest positive in this bounce back is that it's a broad-based movement, upward movement. Many mid and small caps has participated in this bounce back, and many portfolios also has gone up. If you look into that index, Sensex and Nifty up by around 4%, and mid and small cap almost nearly 7% up in the last 1 month. In the month of March, there was a big sell-off, but from the last day on of the current and the last financial year, FY23, from March 31st onwards, market started seeing sharp upward movement, and in the last 45 days, market has seen very good bounce back. And some of the positive things also happened in the last 1.5 months. The biggest positive is that crude oil price has fell very sharply. Now it is almost near to $74, and that is biggest positive for us, because two things it is. First, for that, if crude oil price falls, naturally inflation will come down, and if inflation comes down, then the rate upward cycle which was happening in the last 1 year, that also will come to an end, and rate cut will happen soon. That is one positive. The second thing is that US Fed, which was continuously increasing the interest rates in the last 1 year, the sharpest increase since 1980, in the last 1 year, almost 5% they have increased from 0.25% interest rate. They have hiked to 5.25. Almost 500 basis point interest rate hike was there in the last 1 year. And US Fed has indicated that they have reached near top. And from here, interest rates are unlikely to go up. So that is also another big positive. And it's not only crude oil, commodities across the board has fell very sharply. If you take the coking coal price, that has come down. Natural gas price already fell very sharply. Now it is at pre-COVID level. And copper prices also has fell in the last 1 month. Copper prices, aluminum prices, zinc prices, all the base metal prices has come down very sharply. And this and all is very positive for our country, since commodity price, we are the net importer of commodity. It will help us in taming the inflation. And indices, Nifty and Sensex, as I told previously, it is up by 4% around. Nifty mid cap and small cap around 7%. And many portfolios also has gone up in the last 40 days. If you see, there is a decent move in most of the portfolios. Many of the clients and our investors used to call me and say that index is moving up, whereas my stocks are not moving up. They used to complain, and the last 1 year, I am hearing a lot of complaints like that. That individual portfolio is not moving, whereas the index is moving up. Now, if you see our index weightage, if you see that, just 6 stocks in our index constitute more than 50% in Sensex and around 45% in Nifty. Suppose if you are not owning these 6 stocks, means naturally if this 6 stocks goes up, and if you are not owning, means what will happen is that index, your portfolio will not move up, whereas index will go up. If you see which are the stocks that are HDFC Bank and HDFC. So the merger between HDFC Bank and HDFC is nearing, and most probably another 3-4 months it will get completed. And both the stocks, since swap ratio is announced, both HDFC Bank and HDFC are moving in tandem. For example, one day, few days back, what happened was that MSCI index, Morgan Stanley told that they are putting an conversion ratio of 0.5% for HDFC Bank and HDFC merger. Market saw it as a negative, because they felt that as 3 billion inflow due to this merger, it will happen only just if 150 million outflow will happen. So on that day, HDFC Bank fell by 5%. Since HDFC Bank fell by 5%, HDFC also fell by 5%, because both stocks are going to be merged, and and the swap ratio is finalized. And if you combine both HDFC Bank and HDFC, it is almost 70% weightage in Sensex, and Nifty, it is almost 15% weightage it has in Nifty. Reliance Industry, if you see that, the weightage is almost 11%. ICICI Bank around 8.8 in Sensex and 7.6. The next biggest weightage stock is ITC, followed by Infosys. So if you take this 6 stocks weightage, almost 51% of Sensex weightage is in this 6 stocks. And if you do not own these stocks, naturally you won't move in tandem with the index. And that's what happening, because if you see that most of the portfolio don't own HDFC Bank and HDFC with 17% weightage, naturally their weightage will be lower. And if HDFC Bank moves up very sharply, means naturally you will be lagging in the index. And similarly, if you see that ITC, which did phenomenally well in the last 1 year, most portfolios don't own it. And from the weightage of 3-4%, now it has gone to around 7.5% in Sensex. And the portfolios which are not owning ITC, naturally they will be lagging the index movement. So if you want to track the index movement, means you should have some exposure to the above stocks mentioned in this table. Otherwise, naturally your portfolio and index portfolio will not move in line. Sometimes index portfolio index will do well, and your personal portfolio may not do well. And if mid cap stocks are doing well, means and your index will do well, your stocks will do well, and index may not be doing that well. So we have to decide whether we want to move in line with the index or not. If you want to move in line with the Sensex and Nifty, means at least you have to take exposure to these stocks. And if you leave aside these 2 stocks, the next 2 weightage stocks are L&T and TCS. And apart from that, most of the stocks don't have much weightage in the index. They have just 1%, 1.5, some are below 1%. And there is no point in owning these stocks, if you want to move with the index. If you want to move with the index, means you have to own some stocks, some exposure in the above mentioned stock. Otherwise, portfolio may not move in synchronous with the index. Another interesting phenomenon happening in the market is that time is getting very shorter. When you compare 10 years, 20 years, 30 years back, now what is happening is that individual stock movement, both upside or downside, are happening very quickly. For 2 examples I have put in. One company called Apar Industries, which is they manufacture conductors and for electric transmission. And that is their major portion of the business. Apart from that, they do have some transformer oil and other businesses, but main business comes from the conductor business. And if you see the Apar Industry, for almost 4 or 5 years, it was range bound, around 700 to 500 it was trading. But suddenly within 1.5 years, from 700, the price went to almost 3,000. Last week, it hit 3,000 when the result was announced. After that, there was some profit booking. So 5 years, there was no movement. And in 1 year, it went up by five times. So this type of movement is happening in many stocks. It is not only upside. Similarly, if you see on the downside, Gland Pharma at one point of time, it was trading around above 4,000. Within 1 year, it fell from 4,000 to almost 1,200 levels. It fell within 1 year. So downside also, if you see that almost 70-80%, the stock price fell within 1 year. So what is happening now is that both upside and downside are happening very quickly. So we don't know whether when we buy a company, we don't know whether we are right or wrong. Near-term stock price movement is not indicating that, because the stock price goes up very sharply in a very short period of time. And if we feel that, if we feel ourselves that our stock is not performing in spite of good results and fundamentals, means at some point of time, stock market will reward it, that too in a very short period of time. And I see that many investors are, what used to do is that they will take their portfolio and will see that if stock price is not moving, means they will sell it. They will sell it because stock price is not moving. Why should we own a stock? And we will sell it and we will buy some movement stock. But now what is happening? immediately after selling, sometimes what used to happen is that the stock price would go up by 50%, 100% within few months. Many clients have told me this that I was holding that stock for 4 years. There was no movement. Immediately after I sold, within 4 months, the stock price went up by 50, 60%. They used to tell me. So now what we can do is that we should know some fundamentals, and if fundamentals are good, if company is giving good dividends and performance is good, if outlook is good, means in spite of a sideways movement, there is no other way that we should continue to hold it with the hope that some point of time market will reward us. And if we keep on seeing that, if we keep on seeing the screen and if we take the decision miss, most probably we may end up wrongly. This is the crude oil chart. Almost, if you see that in the last 1 year, crude oil was trading above $100. It was around $120. 1 year peak was $120. That is mainly due to Russia-Ukraine war. From that, it has now price has corrected and has come to around $75. Almost 40% correction was there in the last 1 year. And seeing the crude price movement, it looks that most probably the price will further fall. It's not only crude oil prices it is falling. If you see the energy prices, mainly two other products are there. One is the coal price and the second one is the natural gas. Basically, coal price goes as a fuel for thermal power generation, and some of the user industries like cement and all use lot of coal, as well as they use pet coke also they will use. And if you see that coal prices also has come down very sharply, but still prices are high when compared to pre-COVID level. But from the high, prices has come down very sharply. So that is one positive. Natural gas, already price has collapsed in the last 3-4 months, and it is almost pre-COVID level. So that is why some of the companies like Mahanagar Gas and all showing very good profitability, because natural gas price has come down. So it is very important for our country as far as natural gas prices concerned, because we are a big shortage on natural gas and many companies tend to import it. Petronet LNG, they import natural gas and they will distribute to the consumers. And in the last, just after COVID, the price skyrocketed almost 4 times, 5 times. Now, the way it went up, in the similar speed, the price has fell very sharply. And it is very good for us because many user industries like fertilizers, power companies, they use natural gas as fuel. And once natural gas price very sharply means the government also a biggest beneficiary, because the fertilizer company which uses natural gas, their cost of production will come down, and the government subsidy also will come down if natural gas prices fall. Because of fall in coal prices, the thermal power cost generation will come down, and many cement companies also will benefit because of fall in coal prices. And if you see that most cement companies are trading very, very positively in spite of poor results shown in the last 1 year. In the last 1 year, what happened for cement companies was that the raw material prices went up very sharply. Mainly this coal prices, as well as this pet coke prices, and which most of the cement companies use as fuel. Cement is a highly power intensive sector, is a industry, and what happened was that when power fuel prices went up, they could not be able to hike the cement prices in line with the fuel price hike. But now, where cement prices are not going up, but the raw material costs are coming down, that means from here on, the margin for cement companies will go up. Petroleum, crude oil price down, coal prices are down, natural gas prices are down. So these are three basic needs for our country as far as energy is concerned, and the price fall is biggest positive for us. And if they fall, means naturally the inflation will start coming down. The other thing is that it's not only the fuel prices are coming, the energy prices are coming down. The base metal prices, steel prices also, they have started falling. If you see the copper prices, then if you see the aluminum, zinc, all the metal prices has come down very sharply in the last 1 month. Even last week, the copper prices fell very sharply. And because of fall in prices, the Indian bond yield, 10-year bond yield, which was around 7.4, 7.5 few months back, now it has come near to 7%, indicating that inflation will come down in coming days. The other biggest international event that which has happened in the last 1 month is that Fed had made the last hike of 0.25% in the current interest rate high cycle, and they have mentioned that we are near peak and we may be at peak. Like that, they have made commentary, and from here onwards, interest rate is unlikely to go up, but there is a possibility of fall. But US Fed told that they are not in a hurry to cut any rates; they may wait for some time. So what our feeling is that US Fed may maintain this rate at least for the next 6 months, and in the late end of 2023, there is a possibility of rate cut, provided the fuel prices, crude oil prices, and other commodity prices continue to remain weak. And if you see the interest rate hike from 0.25%, they have hiked to 5.25 US Fed. It is one of the sharpest increase in interest rate since early 1980s. Almost for the last 30 years, almost for the last 40 years, this is the sharpest interest rate hike. So we may see some impact of this interest rate hike in US economy, and most of the economists are telling that in second half, US may see some mild recession. If not recession, there may be some slowdown in US economy. That's what the expectation is. But till now, jobs data and all not showing any indication of any slowdown or recession, because the jobs market is still now very strong in US. Domestically, GST revenue collection is very strong. And if you see in the month of April, it is at all-time high of 1,87,000 crores in a month. And but this is not the indicative for coming months. Generally, the April collection will be very high, basically because of the seasonal nature. Because whatever business happens in March, that tax is paid in the month of April. So the GST revenue collection figure is a 1 month lag figure. The data we are getting for April is for the business of March, and we all know that March is seasonally a very high month for the economy, and most billing used to happen in the month of March. And even if you see last year April, it was 1,67,000, but in the month of May, it fell very sharply. So the same thing will happen. And next month, in the month of May, I'm expecting GST collection will come to around 1,60,000, 1,55,000 to 1,60,000 level. I'm expecting it will fall. But what I'm seeing in media is that many are extrapolating this 1,87,000 for the entire year. But it is not going to happen, because April is a seasonally a very strong month for GST collection. But still, we see that around 12% growth in collection is there, and that is seen as a very positive. And one of the reasons for why GST collection is continuously going up is that from unorganized sector, economy is moving towards organized sector. That is what the main objective for GST is, and that is happening. And in this slide, you will come to know which sector it has more organized market and which industries don't have the organized market. If you see the grocery business, almost 95-98% of the total Indian market is unorganized sector. Now, only slowly many corporates are entering into this business. Reliance has entered very aggressively. DMart has entered very aggressively. and big corporates have entered into the business. Till now, almost 98% of this grocery market is unorganized. And what we expect is that from the unorganized level, in coming years, gradually the organized bar will start going up. The unorganized bar will start coming down. Similarly, if you see the apparel industry, it is mostly unorganized. Organized level is less, and there is a very good scope that organized market will keep on going up. Real estate, we all know that it's highly unorganized. That also the unorganized market is more than 80. Jewelry almost 80. Plywood near to 80%. And if you see the stock price of all the companies which are in this business, they usually trade at very high valuation. If you see the grocery market, DMart trade has very high valuation, mainly with a hope that market will shift to organized. And if organized sector market share increase means, mostly these type of companies will benefit. That is what the expectation is. And if you see in the jewelry business, Titan trades at very high valuation. The expectation is that right now there is a biggest unorganized market, jewelry market in India. The shift of unorganized to organized will help companies like Titan to consolidate their market share and grow their market share. That is why the valuations are very high. And in some sectors where the organized sector is very high, for example, FMCG, almost organized and unorganized almost equal. Whereas in plastic pipes, where companies like Prince Pipe, Astral, Phenolics are there. In that field, in that industry, if you see that the unorganized is less, and it is coming down day by day, and most of the companies in organized sector, they are grabbing the market share of the unorganized. Similarly, homeware, if you see companies like Sarah Sanitary Ware and Hindware, where the organized sector has more market share, and decorative paints, the organized sector is very high. Sanitary ware, the organized sector is very high. So this is a slide where one part where the unorganized sector is showing a very high market share, and in another where the organized has more market share. But the one direction is very clear. In next 5 years, 10 years, 20 years, the organized sector will continue to increase their market share, and government objective is also same. And that's why they have brought in the GST, where they want to improve the organized sector. Another set of stocks are going up very sharply in the last few months. The companies which belong to the Capex cycle recovery. And if you see the movement of stocks, market strongly believes that Capex cycle in India is going to be very strong in coming years. And the stock price of ABB, Siemens, L&T, Polycab, all at all-time high. And if you see that ABB, last month we recommended it, and the price went up very sharply. And daily it is going up. Similarly, stock price of Siemens also going up daily. L&T, it was doing very well, but because of some below expected results, price fell very sharply a day before yesterday. But if you kept aside, L&T also at lifetime high. And some of the cable companies, be it Polycab, KEI, even small cap cable companies like Universal Cables, Vindhya, Tele, and other small cable companies, all are doing exceedingly well. There is a big hope that Capex cycle is going to happen in our country, and stock price indicates that that Capex cycle will come up, and these companies will benefit immensely in coming years. And the other segment is the cement stocks. In spite of average results, cement stocks continue to show big resilience. The main reason is that now the raw material prices have started falling, mainly the fuel prices have started falling. Second is that once the Capex cycle kicks in, then cement companies also will benefit, because when company start constructing factories, cement consumption also will go up. There are some slides which indicate that there is a big possibility of Capex cycle coming in. These are the slides taken from Jeffrey's report, and they strongly believe that Capex cycle will come up. and some of the slides I will show it now. Jeffries, we all know that they track our market very closely, and time to time they release lot of research report. So these are the slides taken from their research report. And if you see that debt to equity ratio is one of the lowest multi-year low, almost 8-year low now. Corporate leverage is almost 8-year low now. Corporate leverage, if you see that, according to their report, corporate leverage is at a 15-year low. What they are telling is that in 2010, we have the debt equity ratio we are having now. It was there before 2010, and it is one of the lowest. So when companies don't have much debt, means what it will happen? They will take debt and will do Capex. And that's what they have mentioned. So lower debt equity ratio is one of the biggest point for coming up with a Capex investment. And this is the order inflow, new project announcements by private sector. And it is one of the highest in the fourth quarter of recently ended quarter, according to Jeffries' report. And they say that many companies have announced projects, private companies, and PLI, the government-sponsored PLI schemes, production-linked incentive scheme. That means government will give incentives for new projects based on the production they are making. Even in the current financial results, I see that many companies have received incentives from the government for their PLI projects. And what they are saying is that private new project announcements is highest in the last many years. That's what they are they're finding in their recent research report. So when project announcement comes, naturally new projects will come. Even in Tamil Nadu, if you see that in the last 10 days, almost 3 big multinational companies have announced biggest investment in Tamil Nadu. One is the Hyundai. Already Hyundai has a very big car manufacturing plant in around near to Chennai. Now they have announced that they are going to invest heavily in Tamil Nadu for further expansion. And another company, Mitsubishi, they have also told that they are going to invest heavily in Tamil Nadu. Like that, I see that a lot of new projects are happening in Tamil Nadu. And the last 1 week, Hyundai and Mitsubishi, they have announced it. And some of the companies like Apple and all, they have very big multinational company like Apple and all, they have told that they are going to aggressively increase production in India. So these are not very positive for Capex cycle. And if you see that the main ingredient for putting new project is that first you have to give land for setting up the factory. Then you need skilled, affordable labor you need. And third one is the power. These three are very crucial for setting up new projects. And if you see in Tamil Nadu, there is abundant land is available. And also there is skilled, affordable labor is available. So the two major criteria is solved for big corporates for keeping plant in Tamil Nadu. The only thing, but there may be time to time power shortage will be there, but the government will try to manage and will arrange to give power. That's why if you see that many projects are coming in states like Tamil Nadu, Karnataka, and Gujarat. Whereas if you see in Kerala, there is a big scarcity of land you don't have. Similarly, the skilled, affordable labor, it's not available in Kerala. That is why you don't see much project happening in Kerala. Whereas states like Tamil Nadu, Karnataka, Maharashtra, even Telangana and Andhra, if you see that, so many new projects are coming in by big multinational companies. Even China is saying that many companies which have set up factory in China decades back, now they have started thinking of shifting some of their plants to India. I read an article 2 days back that the Chinese government is very deeply thinking about it, because they are feeling that some of the projects which has to come into China, it is now getting diverted to India, and they are seriously discussing about it. NPA cycle is almost at 25-year low. Net NPA is almost 25-year low. So on one side, corporate balance sheet is very strong, and companies are ready to take loan. On the other side, the lender, their balance sheet also very strong because their NPA is very less. So they can take some risk and give lend money to corporate. Suppose if the banks have very high NPA means they may hesitate to give loans to corporate because already their balance sheet will be in a big stress, and they may try to give only to good corporates. Now since net NPA is almost at 25-year low, the lender also willing to give money to the borrower, and borrower, because of very strong balance sheet, because of very less debt to equity ratio, they are ready to take some risk and take loan. So both lender and borrower are in a very strong position, and that is why market is expecting that Capex cycle will happen. Industry credit growth, if you see that last year the bank credit growth is almost 15% in FY23. Previous year it was 9%. So the bank credit growth is at a very healthy rate of for full year at 15%. But if you see that most of the growth has come from service sector only. Service sector has grown by almost 19%. Whereas if you see the industry growth, it is just around 5.7% only. And that means industry still not start taking loan from the corporates because they have very good cash flow, and as well as the now debt equity ratio is very less. But when they go for Capex, most probably the industry credit growth also will start coming in. And I read it yesterday that RBI told banks that and advised banks not to lend overly to consumer, because already the last 2-3 years the consumer loan has gone up very sharply. There is a risk of turning into NPA, and RBI has told banks to concentrate giving loans to industries instead of giving loans to consumers. There are many types of investments. Some of them may invest in growth stocks. Some of them may invest for short term. But there are certain type of investors who invest only in dividend yield stocks. And if you see that now in the last 1 to 2 years, if you see that the dividend yield stocks are getting attraction from many investors. Generally, long-term investors, they tend to buy dividend yield stocks because it gives them some regular stream of income. Previously, dividend income was exempted from taxation. Now it has been made a tax. And if you see that companies which give huge dividends are IT companies, public sector units, and MNC companies. These three sets of companies generally give good dividends. Why they are good dividends? Giving good dividends, the main reason is that IT is a capital light industry. They don't need much money for expansion. So whatever profits they are getting, they are giving as dividends to the shareholders. TCS last year they have given almost 42,000 crores of rupees as dividends to the shareholders because they don't need money for expansion. Whatever money is needed, it will be made from internal generation, and balance most of the money it will be lying idle. So instead of keeping idle, they are giving to shareholders, and let shareholders decide what to do with that money. That is why generally if you see that IT companies, they give lot of dividends because they don't need much capital for growth. The second set of companies that give huge dividend is PSU companies. Why PSU companies are giving dividend? Because their parent need money. Parent is nothing but the government. So government need money. So for government needing money means the only way to get money from their investments is that company will declare dividend, and based on the shareholding pattern, their parent will get the dividend share. And PSU companies, almost all of them will give at least 30% dividend to their parent, even if they need much money. Even if they first, what they will do is that out of the profit they will give dividend, and based on the balance money whatever is available, they will think on the expansion plan with that money. So PSU companies mainly give dividend because the parent government needs money. The third sort of company that give good dividend is the MNC companies, because their parent are in abroad, and the only income from their Indian subsidiary is the dividend income they will get it, and some of the companies will get royalty income also from their Indian subsidiaries. And most of the MNC companies are zero debt companies with cash rich balance sheet, and whatever money they get, mostly they will give as dividend. Their expansion also won't be that much aggressive like Indian companies. They expand whatever money they have, and the balance money they give as dividend. So these IT, PSUs, MNC companies are good dividend giving companies. And if you see in the last 1 year, TCS, Hindustan Zinc, Coal India, Infosys, HCL Tech are top dividend paid companies in our country. TCS paid almost 42,000 crores, more than 40,000 crores. TCS has given money. Hindustan Zinc has given more than 30,000 crores. The main reason why Hindustan Zinc has given that much money was that their parent company Vedanta needs money. That is why they have given the huge money as dividend, and almost whatever cash they had in their balance sheet, they have exhausted that money. And from here on, I don't expect the dividend from Hindustan Zinc. Whatever dividend they gave last year, from in coming years, it will be lesser than what they have given last year. Coal India made good money, and the parent is an government, and so they gave good dividend. Infosys and HCL Tech gave almost 12,000-13,000 crores as dividend to their shareholders. And long-term investors generally prefer dividend-paying stocks, and we used to see lot of memes coming on dividend preferring investors. So this is one of the one which I saw it a few months back. See, long-term investors, if you see that even when there is trading halt or market crash or upper circuit, they will feel very cool. There won't be any tension like that. But whenever company is announcing dividend, they will become active, and they will keep on asking it. Even I know that many long-term investors are there, our clients are there. Even if there is a market crash or upper circuit, or there is a trading halt, they won't call me. And they will call me only on the day when the company is declaring dividend. Many ITC investors are there, and they will call me on the ITC board meeting day. On the day of board meeting, they will start calling me from the morning onwards. How much ITC declared a dividend, they will ask me. I said the result was not announced. Then they will again call me at around 3 p.m. whether ITC has announced dividend. They will ask me. I will say I will tell that ITC not at announced date, and then I will call again at 9 p.m. and they were very curious to understand, to see that how much dividend they will be getting from ITC. So on the day they will keep on calling me 3-4 times till they get the dividend rate of the ITC. So this is what the meme is. And it looked very funny for me when I see this. That's why I have put the slide. Even some of the companies I own about 10 years, 15 years bought, I don't worry the stock price goes up or down. I never care about it. Even results are bad also, I don't care. I will be very curious on how much dividend the company is announcing. And some of the companies which I am holding for the last more than 15 years, like Indraprastha Gas and all, I don't worry on the company performance. I simply look at when I open the ITC, when I open the Indraprastha Gas result, I will see how much dividend the company is paying, because I was more curious on the company dividend, because the reason is that the cost price is very less, and I'm not, and the stock price has gone up multiple times of my cost price. So I'm not worried about a 20% movement in stock prices. I am more concerned about the dividend, which I used to get as a regular stream of income. Q4 results are coming. The biggest sector which disappointed is IT. There was the biggest disappointment from the Infosys result. The other companies managed to show somewhat result, but the sector which shown big disappointment was IT. Banks results were mixed. I will tell some of the banks like ICICI Bank posted very good results, whereas some of the small PSU banks like Indian Bank, Union Bank, I'm not very happy with the results of the PSU banks because their deposit rate growth rate is not very strong. If deposit growth rate is not very strong, means whatever money you are having, you will lend it. But at some point of time, you have to increase the deposit rates. Otherwise, you cannot lend it. So I'm not happy with the PSU bank results, particularly mid-range PSU banks like Indian Bank and Union banks. They're still their NPAs are above 1% for Union Bank and all. So right now, NPA cycle is less, but from here on, there is a very good possibility that NPA will again start increasing for PSU banks. Not immediately, maybe by next year, NPA will start increasing. And another important phenomenon which I see on the result is that the pressure and margin compression is reducing very fastly. In the last previous results and all, what used to happen is that most of the companies, there is a big pressure on margin because raw material prices has gone up very sharply, whereas the end prices hasn't gone up. So there is a big pressure on margin on many companies, but that started reducing. So that is one big positive. From here on, I expect that margin improvement will start happening from next quarter onwards because of falling commodity prices. One segment which has shown very poor results is the agri-chemicals. Companies like Rallis, UPL, then the Aztec Life, they have disappointed a lot. One of the reasons for that is that the demand is very weak. There is a huge inventory in the channel. Right now, the inventory destocking is happening, and it is expected that another 1 to 2 quarters, agri-chemical companies will struggle. And overall, if you see that around 562 companies, sales has gone up by 12%, whereas the net profit is up by 2% only. When compared to last year, it is 23 and 44. The main reason for lower growth in net profit is that commodity companies like Tata Steel, there is a sharp fall in profitability. The second thing is that Axis Bank, which shown good profit last year, this time because of some exceptional item, they have shown more than 5,000 crores loss. So that also a big base for net profit coming down. And this is the result of 562 companies, and it is taken from the Business Standard newspaper. Mutual fund inflows, if you see that last year the mutual fund, last month the mutual fund inflows was almost 20,000 crores. Historically, March used to be a very high inflow month. Even last year also, if you see that March 2022, the inflow was very high, more than 20,000 crores inflow was there, and then suddenly it fell next month. Similarly, this year also, if you see that March there was a big inflow, and April there was a net inflow of just 6,500 crores, which indicates that there is a net outflow from lump sum investors, because almost 14,000 crores we are getting from SIP, and if you keep aside that 6,500 crores means almost 7,500 crores, there is a net redemption from equity funds from the lump sum investors. And the second thing is that what I see is that whenever market falls, I see that the mutual fund flows tend to increase. Whenever market goes up means the redemption used to happen. That phenomenon I used to see it. In the month of March, the market fell very sharply, inflow was very high. April, market went up, and there was an outflow from the mutual fund. FII flows, FY 22-23, two years of net outflow, 23 billion outflow is there, but FY 24 started on a very good note. And if you see in the last 10-12 days, FIs has been continuously buying. Now till now, almost 4 billion net inflow was there from foreign institution side. Previously, FIs were continuously selling it. That is why our market could not able to go up. Now, since the start of FI buying, market is going up. Politics, next 1 year, there are a lot of events going to happen. Even today, if you see that Karnataka election has come, election results were mostly in line with expected only. I will tell that it was expected that the ruling BJP party may be difficult to come and they may get around 80 seats. That's what most of the expectation is. And till around 10:30 as per situation at 10:30, I saw that as per the expectation, the Karnataka election was there. Monday, there may be mild negative reaction, because what I see is that the expected was that that BJP may find it difficult to again re-elected because of local issues, and the same way outcome has come, and markets, I feel that unlikely to react very negatively for that. And if you leave aside Karnataka, 4 state elections are scheduled in current year, another 6 months. That is Madhya Pradesh, Rajasthan, Chhattisgarh, and Telangana. And we have to see what will be the outcome on that. And general election next year, April, May, just 1 year away from it. And the markets generally used to be very volatile ahead of elections. And we may see a lot of action happening in the market. Even now, I see that many mid caps and small caps are going up, and screen indicates very strong undertone bullishness in the market. Very strong undertone bullishness in the market, and many stocks are going up. Lot of buying seen in the broader market, particularly the way some of the stocks are reacting. The way I see the screen is that something like happened previously, like in 2013-14, when we had start seeing a big, small, and mid cap rally. The similar way I'm seeing many stocks are going up. One of the reason what I feel is that the commodity price cooling off is generally very positive for mid cap and small cap stocks, because most of them were the consumer of commodities, and that may be the reason for mid caps and small caps doing well. Similarly, the Capex cycle recovery expectation, that also will be very benefit for the mid and small caps. So our take is that market unlikely to see a major fall. That's what we feel. And there are a lot of actions in the market. One can stay invested. There may be a small correction here and there, but undertone looks very positive, and the fall in commodity prices will be very positive for many mid and small cap stocks. So remain invested, and see individual stocks. Try to pick individual stocks which can do well. And I am not expecting major fall in the market. And data to watch, FPI action, we have to see it, because many stocks, foreign portfolio investors for last few days, they are continuously buying, and if they continue to buy means, then market will go up only. We are unlikely to see big fall. Then monsoon, we have to see next month, because of, now right now it is expected that El Nino will hit and it may affect monsoon, and we have to see how it is going to happen. The initial estimate is that the monsoon arrival may get delayed because of various reasons, and it may get delayed. So at that time, we may see some volatility in the market if monsoon gets delayed. So this is the presentation for this one, and we will see the recommendations. So these are the recommendations we are giving this month. The first one is Siemens. As I said that the Capex cycle recovery is there. The Capex cycle recovery is there, and some of the stocks which are favorite for the market are ABB and Siemens. Last one we gave ABB, it has given good returns. Similarly, Siemens, even though the valuation is very high, right now the momentum is very strong in Siemens, and that is why we are recommending these stocks. And the second is Dalmia Bharat Cement. Previously also we have recommended, and why we recommend this company is that the company is aggressively expanding their volume, expanding their capacity. They are expanding it, and someone who want to buy a growth company in cement sector means Dalmia Bharat is a perfect stock for them to buy because they are expanding their cement capacity aggressively, and soon they will become the third largest cement company in our country. They may overtake the capacity of Sri Cement. So the top company which are having highest capacity is Ultratech. Then we have ACC Ambuja, then Sri Cement. The fourth one is Dalmia Bharat. And what we are expecting is that next 1 to 2 years, Dalmia Bharat will become the third largest cement company. The third stock which we are recommending is the Sanofi India, and the company has announced a corporate action of demerging their consumer business. Recent result also good, and the company used to give good dividends. And somebody want to buy an MNC company means they can buy Sanofi India. The fourth stock GSFC, previously also we have recommended. The main reason why we are recommending GSFC is that recently Gujarat government made a notification that Gujarat PSU companies should give dividend as per the profitability. At least 33% of their profit they should distribute as dividend. And they have mentioned that if they have higher reserves means they have to give bonus shares as well as they do buyback. And GSFC, if you see that their book value is around 293 rupees, and stock is trading at a huge discount to their book value. And there is a very good possibility that GSFC may give bonus shares as well as they will declare very high dividend in a coming board meeting. And for that reason, we are recommending this GSFC. And one reason why the stock price may see time to time fall is that it is heavily owned by foreign institutions. So whenever the rise comes means generally they may try to sell it. And that is the reason why whenever the price goes up, it will fall a little bit. Then again, it will go up. And GSFC, somebody wants to buy a bonus candidate means they can consider buying this GSFC, as well as company will declare very good dividend. And Balmer Lorry is the fifth company we are recommending. That company also will give good dividends, and government owns around 35% through Balmer Lorry investment in this Balmer Lorry, and most probably government may try to sell off. It is unlikely to happen in the next 1 year. Next year, the new government, whichever comes, they may try to sell off this Balmer Lorry. A company don't have any dividend. They have huge cash. It's a diversified company. 4 or 5 business they are having. One business is their travel, tours and travels they have. Then the container freight station they have. Then the steel drums they are manufacturing that they have. Then the chemical division they have, where the leather chemicals like leather and all they manufacture. Then they have lubricant division. Almost 5 divisions they are having it. And all of the 5 are doing well. Their main profit comes from the container freight and tour and travels. The company used to give very high dividend. Valuation is reasonable. Somebody who wants to buy a dividend yield stock means they can consider buying Balmer Lorry. And last month, reasonably done well. Reliance has gone up, and from our recommendation price, ABB target was achieved. Whatever target we have given, it was achieved. Gabriel also target achieved. The LNT, it was doing very well, but unfortunately, what happened was that after the result came, the price fell very sharply on a single day by 5%. But one can continue to hold LNT, and our expectation is that LNT will continue to do well because of the Capex recovery cycle. And Orient Cement also one can hold on. Lot of buying happening in Orient Cement. So these are the recommendations which we gave last month. Almost done reasonably well. Nifty was up by 4%, whereas our recommendations up by 7%. Our recommendations was.